Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Egld. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to watch that before watching this one. It's going to be in the top right-hand corner of your screen. Now, also, I have two donation links down below in the description if you want to support Ukraine. Feel free to do so by going over to the official websites I have linked down below. Thank you all for watching. Thank you all for the support. Let's get on with the technical analysis. So jumping into the daily chart, this is Elrond against the USDT, and we are on TradingView. So I have two Fibonacci retracements currently. So this is going to be the swing high of the larger one, and this is going to be the swing low of the larger Fib retracement. Okay, so the level that we have rejected right now in August was the 0.236 of the larger Fib retracement. Okay, so we retraced from the zero level all the way to the 0.236, and now we're coming back down to where we came from, which is typically what you see with these after such strong corrections to the downside. So right now, I want to show you the swing high and the swing low of the smaller Fibonacci retracement. So we have the swing low here in June, and the swing high is the peak that we had in August. As you can see, we saw a dump ever since then, and we have been accumulating in this falling wedge pattern. So potentially we could go all the way down here and potentially retest $45 or retest this low here, which was at 46.26. And from there, we could see a strong break to the upside and get rejected either from the golden ratio here at $54, or our technical target is going to be here at the 0.5 at 56.80. And that is because the point where the pattern was created is at $56.80 or $57. So that is going to be your technical target, which is going to be, after we start breaking out of the pattern, that is your target. Now, you're not going to get there in a day after you break out. Sometimes it takes, even less than a day. Sometimes it takes a week, but eventually you get to your target more often than not. That is why it's your technical target. You obviously have to mind the 55 daily EMA. That is a major resistance level, and the 20 daily EMA as well. But we'll break that, obviously, if we're going to be breaking through the pattern, because the 20 EMA is already inside the pattern. So if we start breaking through the pattern, the EMA is going to be the first thing that we break. So you have your golden ratio at $54.13. That is an important level for us to break. If we start backtesting it as resistance, as we did over here, we're going to get sent back down. So this is potentially your dead cat bounce scenario, because you retrace, you print a high, you start coming back down, and you start running into the golden ratio here, and that is your dead cat scenario, or dead cat bounce scenario, because you run into the level with the most resistance and then you dump down. So if we start losing the low that we printed here in June, then our technical target is going to be all the way down here at $36, which is slightly below the June 11th or June 13th low that we printed in this year. So be on the lookout for that, obviously. Now you still haven't lost this low, so there is no point in targeting $36. But in case we see a capitulation while you're asleep or while you're at work, it is smart to have buy limit orders set up and ready to go. So potentially you could have multiple limit orders ready to go at $36, at $39, at $41.50, at $46, just so you're ready in case we see a move to the upside. Now, if you're looking to take some profits, obviously here, $71 is a great area to take some profits, because we ran into this area here in August, and this is the 0.236. So we retested the zone all the way back in May of this year when we had the initial dump. Then we had a retracement to the 20 daily EMA, and from there we dumped even lower. So I would say this is your short to midterm target at $71.50. Obviously depends if we have more capitulations in September, which I think is very possible. Your next major resistance level is going to be the 382 on the Fibonacci retracement. That is $105. And after that, you have the 0.5 at $144, and obviously the golden ratio at $196. Now, the golden ratio of the larger Fibonacci retracement is actually far more important than the golden ratio of the smaller one, because obviously the larger the Fib retracement, the more important it really is. So here, as you can see, you have been running into the golden ratio twice. So this level is going to be of great importance for us. $196 or $197. We have to break through that level if we want to start retracing to this high over here at $544. I personally own Egld tokens and I am very bullish on the project. So I will be staking, and I'm currently staking, and I will be holding throughout the next year, 2 years, until we enter the next bull market. Jumping into the daily RSI here, as you can see, since the last update, we have lost, I think the last update was after we lost this support of the channel up pattern. But as you can see, we had this channel up pattern. We had a couple of fake outs. We had one fake out here below the pattern, and we had one fake out above the pattern. Then we came back into the pattern. Then we lost the pattern, back tested the green trend line I gave you guys. And right now we saw a bounce from the green trend line, and potentially we're looking for another test of support of the same trend line. Now this trend line is important because we saw one rejection in March, one rejection in June, one rejection here in July, and then we had a bounce with a fake out below in July and a bounce here in August. So potentially another bounce could arrive here in September. And obviously the support at 21.42 on the index is very important. You had a touch here in May, a touch in June, and also a touch back in January of this year. So if you see yourself come back down below this upper green trend line and below the index of 30, just know that this would be your absolute bottom, right? And even without this support trend line, if you're below the index of 30, that is typically a very good entry point because you're oversold. Now let's switch over to the Binance website. So moving over to the weekly chart on Binance, I do want to show you this falling wedge that we're in right now on the weekly RSI. And as you can see, we started breaking above the RSI over here, and now we're coming back down to it. Now, there is a potential that we could bounce from it over here and start moving to the upside. That is always possible because as of now, you haven't really come back into the pattern yet. So hopefully that doesn't happen. And this falling wedge is great with a great target here all the way at the index of 50. Okay, so that's going to be your target if you start breaking out. But what I assume is going to happen is that we're going to dump here in September when we're going to have our kind of final major dip before we have the run up into November, followed by another dip, and then we can start recovering into 2023 and 2024 when we start, getting ready for the next bull market with the Bitcoin halving and all of that. The weekly stochastic has reversed midway through here, and we're on our way to the oversold. So if you see yourself in the oversold zone, just like we've been here in since May up until the end of July, then that would be a great entry point in my opinion. We could potentially land here for a couple of weeks before moving up into November. And I talk about November a lot because that is when we usually peak out during the autumn season. So last year we had a move to the upside in November, and the year before that we had a move to the upside in November. So also we had a bullish cross here August 1st. And the last time we had a bullish cross in August was on August 9th last year. And since then you can see the move that we've had. And it all started with us getting a bit overextended. But as you can see here, we're just not going to be able to have the same bullish move because there isn't enough liquidity. This was in a bull market. This is in a bear market. Now, we could have a strong move to the upside, don't get me wrong, but I don't think we're going to be getting up all the way to the all-time high prices. I would say that the best option for us in November would be to retrace to this resistance level over here, which is a very, very important level at $132 because this is the support that we back tested in March of last year, in August of last year, and in February and March this year. So we lost it here in April, but we haven't had the back test of resistance. So potentially this could be your back test of resistance here, guys. Just keep that in mind, okay? This is something that you could be looking at So yeah, from where we are right now, that would be a great opportunity to get a 170% trade. So in my opinion, that's not too bad even in a bear market. So thank you all for watching, guys. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon. You can get my trade alerts, my low cap gem calls. You can leave suggestions, request technical analysis and videos, and you also get a weekly podcast episode. Thank you all for watching. I'm going to catch you in the next one. Goodbye and good night.